You're in a parabola. When will this gold market be over? We're getting a parabola now for all the back pay we're owed for when gold should have been doing what the M2 was doing. So let's talk about the gold's price recently and why some people that have got nervous should not be getting nervous in any way. Now, it's been knocked back because it was doing far too much, far too quickly. It took 6 months to do what took 120 years to do. And this is the next big move. We know the real silver bull trade, the next big move is 90. And then the next move is 333.
Welcome to the Macroscopic Podcast presented by Gold Republic. My name is Alexej Jordanov, and in this format I invite you to look at the world through different lenses, to see what's hidden in plain sight. I hope you will get fresh insight and enjoy this conversation. If you do, as always, please give it a like and subscribe, but also leave your actions down below in the comment section and share it to those who need to hear this. But before I start, I'd like you to know that if you open an account at Gold Republic, you will receive 1 free gram of gold. Just click on the link in the description. Welcome back to the Macroscopic Podcast. My name is Alexej Jordanov, and today I'm joined with the one and only market sniper, Francis Hunt. Today is the 29th of October, 2025, and we have a couple of topics that we'd like to discuss with you, Francis. Well, first of all, welcome back.
Glad to be with you. Thanks for having me on, Alexei.
We've had the last interview together, 101 in June, and then after that we had an interview with Matt and Matthew Piepenberg and Henrik Zeeberg, and that debate actually, as a disclaimer, will be brought back to you for all the theory and intellectual clash that we might unravel in the coming weeks. So stay tuned, subscribe to this channel if you want to be notified when it's going out. But first and foremost, I would like to discuss the price action that we've seen in precious metals, and most notably in gold and silver. So how do you explain the significant backdrop that we've seen in the recent days? What were the factors, and where do you see all that in a broader picture in the cycle when we zoom out?
Well, it's an interesting one. I'll maybe just give some color before we get the chart straight up. I've got a gold chart that goes back to 1883. The first $1,000 to make it took 120 years. You know, it was 2008 that we got the first time we crossed $1,000. So that was 120 years. The time duration to the next $1,000 was 12 years. So you went from 2008 to 2020. I think you'd agree that's quite a reduced rate of time for the same movement in dollars. Then the next 1,000 from 2020 to the point where we ran 3,000 was 5 years. So it was 2020 was that high, and we did 3,000 this year, mid-year. Then the next 1,000 where we actually ran 4,000 was under 6 months. So you've gone 120, 12, 5, 0.5. Now, if anybody understands what a parabola is, when you non-log a chart, and I'll show this visually in a minute, but it is when you're achieving a linear chart is 1 unit of time, 1 unit of climb. That's a 45-degree angle, and it's quite linear. And if you do another unit of time and you do another unit of climb, you end up with a 45-degree line. If you are doing 120 years to get 1,000, and then you are doing 12 to get your next 1,000, and 5, and then 0.5, what you're actually getting is ever reducing time frame, yet the climb rate is ever higher. That's the definition of a parabola. Many people are not quite clear what a parabola is. It's an exponential move. It's not to a multiple like 1x climb, 1 for 1. It's actually each time it's more juice for less time. And that's an exponent. It's like when you cube a number, 1 cube, 2 cube, 3 cube. By the time you get to 4 cube, it starts to be quite a big number that's coming out. And that's where we are on gold. So what tends to happen is when you're getting more parabolic, there's a lot of people that are recognizing it's parabolic and just can't afford not to be in. So they just chase and hit the stack. All sense of pricing and value, it's just about get me gold, get me silver. What that happens, when that happens, typically you have an order stack and a bid stack. And normally it's proliferated with depth with levels that people are prepared to get in. When you get price advances that accelerate too fast, you get a bit of a thinning of the bid and order stack because it's moved too dynamically. And what that means is it starts to overshoot. And then eventually you get to a point where some people say, well, it's a bit much in such a short time frame, could have a pullback. The sellers start to sell, and the bid stack hasn't built up. So there's less volume. So they push it further down. It's just the introduction of volatility. What happens is people's need to get used to an entirely new level and standard for gold price and fiat debasement, because it's actually restricted by our paradigm of ability to understand where it should be. And when you talk about the metals markets, they actually went down during the financialization of everything years. The financialization of everything years was from the Volcker period where he super spiked rates. He killed the gold bull at the time and resaved the debt markets and pushed rates so high. He made bonds so cheap that they actually became potentially quite valuable. And then we had the 40-year bond cycle. During that period, gold, there was still inflation. There was still an expansion in monetary supply. Gold should have been doing a linear increase according to the M2. And in fact, the M2 itself started to be more of a parabola, but gold actually went down from its 800s, well down until it hit the lows around 200s in 99, going 2000. Just as we were having one of our first major bubbles, being the .com. And that was basically the bottom of gold. It started to move up, but everything else was still moving up faster. So what's actually happened is we're getting a parabola now for all the back pay we're owed for when gold should have been doing what the M2 was doing and actually was going in the opposite direction. So it was suppressed, it was ignored. Everyone goes, why do you want to hold that? It doesn't pay any interest. You dig a hole in the ground, you get it out, and you put it in some other hole in the ground. All the Warren Buffettisms, all the various things. It's the culture. It's the epoch of stocks. The end of the bond rates high of 1880 brought in the epoch of stocks and to a degree bonds. It was a bond bull, but the stock bull was even bigger. This was the Warren Buffett era. We all went from 1980 to finding out his name in the mid-80s to 90s. We followed him and he just became billionaire plus, plus, plus. You've got to invest for your epoch, and Buffett went long stocks that were cash flow generative. He wasn't particularly genius. He never bought fluff. I mean, in terms of patience, he was a genius. I don't want to strip him of anything, but he invested for his epoch. And the epoch ended with the bond turn. And here's why I say that. Because with the collapse, when we've all been predicting fundamentally it had to happen, but we didn't have it technically. The bond market kept generally climbing and rates kept going lower. And then we had CV19, which was a blow-off low on rates. It was a capitulation on rates and a blow-off high for bond valuations. And at that point, we said that's likely to be a top, and we confirmed it a little later in the year in September in bond market. And that was our first call on the bond markets. It's a 40-year market. First time we said technically that's a turn. It subsequently lost 55%. So what's actually happened is you need to remember that fiat and debt are one of the same. Debt is literally fiat paid later in the future, for which you pay a maintenance fee in the meantime. So it's all fiat and debt. It's all the same. Some people like to think bonds can crash, but there's no net effect on fiat. The one births the other is the other. They are yin and yang. I've sometimes used the metaphor, they're Siamese twins conjoined at the head. You can't drown one without killing them both. It's a bit of a sick metaphor. Forgive me for it, but it's the only way I can think about it. They both have to breathe. You can't put one under the water and not the other. And this is where people get everything so wrong. We are in a debasement of currency. The benchmark of account, that subject accounting we did at school, some of you did, some of you went on to become accountants. There's dollars, euros, you're writing numbers and it's of a unit of something, and it's a currency. And the key part is we are now in Ernest Hemingway's bankruptcy convexity stage, where you're at the very fast, slowly at first and then suddenly very fast. We're in the suddenly very fast part. It's the inverse parabola to gold's parabola. You don't get gold doing the parabolic moves that I've just described by time frame, picking up $1,000 from 120 years to not even 6 months, picking up $1,000. You don't get to that point unless something weird is happening. And the weird thing that's happening that most people think there's something weird happening, but I'm not sure what it is actually fiat debasement. And the reason people don't notice it is other fiats that they compare themselves to are debasing as well. Yes, the dollar is down 12% to the euro and the Swiss franc this year, so it's debased more. But all of them are debasing. Then they say, well, why don't you see that? The biggest propaganda is your statist organization's CPI. Inflation is the next lie to be exposed. We called the lie on jobs markets 3 years ago. We said when they had a recession, it was a recession. They said, no, it's a red hot labor market. Yes, we had 2 negative quarters, but it's not a recession. Look how many people are being hired. Biden, Yellen were hiring DEI consultants and various other things. There were fake numbers, fake frauds, and there was the birth death model. They ended up doing revisions, monthly revisions, quarterly revisions, annual revisions, and then annual revisions on previous annual revisions. And they were removing entire millions out of the labor market. In short, the stats on labor were inaccurate by a long way, probably a deception. That probably had political meddling in it as well. And our argument is, so it is with inflation. So the only reason everybody's cost of living is going up. Gee, even Japan had, within under 2 years, 100% increase in a staple like rice. You've seen what's happening on the USD JPY. It's been as weak as the dollar. It's softening to the dollar at the moment. And we might talk about that if we talk about the yen trade, the carry trade, I mean. But the key point of this is all loss of buying power. Everything costs actually a lot more, and it's far higher than you're being told. And I've got lots of anecdotes of the exact same, New York strip beef from a year ago, the lady that did the Walmart till in COVID 2020, and 5 years later, and how it's gone up, 2.5 times, and et cetera, et cetera, et cetera, the exact same items. But you're not seeing that in your CPI number. And I think you like that phrase, and I think you're right about liking that phrase. So actually, you're in a compounding a double-digit number in fiat debasement. So every time you have cash, it is debasing. Better to have cash in hand than cash in a bank, but it's debasing. You're not being paid meaningful interest in almost any scenario, and it's debasing chronically. So what does that mean? The new benchmark for account should actually be a gold ounce on everything. And that's why you should value your wealth in gold ounces. You should value your property in gold ounces. I know we've had some feisty chats with Henrik, and it was enjoyable. And he's talking about melt-ups in stock markets, and I continue to say there is no melt-up. There is no melt-up. It's going up in nominal normie terms. So let's bring this up and talk about it. So let's just say the SPY, for example, S&P. If you use the correct basis of account, this looks like the very strong market, and it is nominal normie terms, especially now. You're just running up. We're on a 4 hour. Let's go on a longer term. That looks like a very strong market. Let's remove it. But the last real outweighing dominance of the stock market was in where it was a melt-up, a legitimate melt-up, was actually the 1999 run. Now, to many people, that sounds unbelievable. So I say, okay, just let's divide by gold. And there you get your rebasement as it should be. That is the S&P. There is the place where there was nothing else you should be in but the stock market. Right there. It was killing against everything. It was killing against gold ounces. This is the SPY divided by gold. To say this is a melt up means that it is the predominant asset of choice for which everyone should be in and waiting to sell the top. Right now, this is quite clearly not a melt up, not in dollar and gold ounces. In nominal devaluing dollars, it looks absolutely fantastic. But you've actually got quite possibly a head and shoulder formed. We had a little bit of a pullback on gold, which is part of your question, which I'll still answer. And you might get a bounce here now of the SPY relative to gold, but that is probably a reversal, a rounding top, and it's nowhere near what happened there. This isn't a melt up. That is a melt up by definition. And that's a melt up across all benchmarks of accounts. And that was the period, 1993 into the year 2000. So in gold ounces, you should be, the epoch has changed from the equity epoch of the grand 80s. The biggest bull market started in 82 in equities, and that was the devaluation of gold as money and the financialization of everything and the introduction of leverage to everything. And leverage then filtered into housing. We got the housing bust. We got dot-coms, you name it, prime, subprime cars, just everybody spend, everybody load up on debt. That is the whole thing. Now we're in the anti-debt period, which is also the anti-fiat, remember, but it's just debt is delayed fiat. So we are now in the epoch of, hey, let's preserve our capital rather than talk about yield on capital. Let's talk about return of capital. Let's talk about return of capital instead of return on. And that's the era we're in. So gold is it. So let's talk about the gold's price recently and why some people that have got nervous should not be getting nervous in any way. You're in a parabola. When will this gold market be over? Now, it's been knocked back because it was doing far too much, far too quickly. It took 6 months to do what took 120 years to do, and later 12 years to do. That is
Was it something that you
incredibly.
actually foresaw, like this pullback in terms of like a TA on a TA perspective?
Yes. So particularly with regards to silver. You may recall when we spoke that on that silver, we said there's a 45 to 50 range that we think that there's going to be, we go once, twice, three times a lady. And many people that draw the classic, what they call the cup and handle, you've had the once of the 1980, you've had the return. We'll go to silver, and I think I'll answer. Let me do that right away because that's your current question. So yes, we foresaw a pullback. We said you're not going to get your face ripping move yet on silver, which tells us that gold, the whole complex, will likely have a rest. And here's the chart for silver. Let me just put it on a quarterly and pull that through. So we said it's quite likely at this range. We put a box on it. We weren't able to give you an exact price point, but we said as you approach 50, it's quite likely that you're going to receive some form of pullback. You may recall that. And we use that catchphrase to help people remember that we did say that. We go once, twice. It's the Lionel Richie song that I'm having some fun with. I can't say I was a huge fan, but it did stick out. It was played so often. 3 times. And then your lady. That's your winning. You walked off with the beautiful girl. That's it. It comes there. But 3 rejections. She says no to you 3 times. And on the 4th time, you're going out for that date together. And this is a bit of a shooting star here. And there is a pullback. How on the bigger time frames, it's going to be interesting to see where the month ends. It does point to an inter-rejection. You can see, for example, that was a violent one, a more violent one, and it did lead to further downside. This is actually by log scale, not particularly violent. And we said the pullback will be less and not as deep. And this is the next big move. This is the primary move. This is your most exciting move coming. And it's you once you've hit 3 times, you have to wait for that dip to do it. So we did predict that. I mean, we also appeared with Mario, and he was saying, no, I think it just rips straight from here. And we were saying, no, I think despite it looking super strong right now, that was while this was happening, and you were up at the 54s, we still think you get that rejection. And it came a little later, but there's a little bit of an inflationary tilt to this. this high is tiny bit higher than that one as well. You've got to remember there's a certain time period between each of these, and again the fiat debasement. But so if we do our HVF method draw, which is something that we're unique, we'll recap the silver targets with you. I just have to make one adjustment for this slightly higher high on the second one. It's so close, and we make it just a minor imperfection, 49.81428. That is the high there, and we say leave that one out, and this is what you get. So here's our setup. Now, HVF method is our unique trading methodology, and it got us long this trade well before the cup and handle guys were in here. For them, it was only interesting once we got to the $50 mark, or the $45, $50 mark. For us, you broke over here, and that was still in the 30s. And your stop loss is there, and this has made what we call our first interim target. And typically after running that line, you'll see it there at $40, 40.92. So once you've run 41, you typically get at some point some degree of pullback. Now, how far does the pullback go? Our worst case scenario would be a revisit to our green line there. It doesn't have to do that, but sometimes it can happen. It's called a return move to the triggering event here. That would bring you right down to the 30s. I don't feel that. This rejection is nothing like the scale of that shooting star rejection. So I think you get a little bit lower. The key is the bottom pick you need to do on our leverage trade, because we are turbo stacking ounces. We use HVF method to use judicious tight stops with expansive reward entries to make profits that we then convert into further of these beautiful things, which is a beautiful example, by the way, a little 10-ounce bar there that I'm showing you. I've got a 100-ounce demo here. So we went to the vaults to check everything was still there with our partners. I take one or two samples just for showing on the channel. That is 100 ounces. I'm actually struggling to hold it up. I need to go get back into the gym. But yeah, so it's going to do incredibly well. 100 ounces at about $50, about $5,000 now. That thing is going to go incredibly high up in value. So what happens next is some form of return move. Can't tell you it will go all the way to the green line. I think it's going to be a lot shallower. Sometimes it supports on our first interim target and does a dip there. And sometimes it turns even sooner. So we'll see about that. But the next big move is 90. It's going to pause before running 100. So whatever it does do, let's say it comes a little bit back, that's next key interim level is at 90.9. My eyes, I need to check. 90.68, around $91. So we're going to pause just shy of 100, or we might just do a technical run of the 100 and get rejected and churn around here for a while. And then the next move is 333 for me. So these open areas between the targets are typically carried with immense, but it's not the same dollar, and there's going to be potentially some degree of crisis that could go along with this. So this is an incredibly positive time. You're still to answer your question, is this a gold top or why is it pulling back? No, because we're at 84 on the gold silver ratio. So, we haven't even gone through 75, 72, which is a key level for us. I think people should be now prioritizing silver a little bit more, but remember, gold runs first and hardest. And when we talk about the gold silver ratio, let's bring it up again. We were the one people that said, if you were to get, and we've spoken about this Cayman Islands Ponzi scheme, how there's these proxies that are always ensuring strong demand for, dollar-denominated debt that are hopelessly over-leveraged and are being lent money by the primary dealers in the debt markets that are certainly part and parcel of this cartel. You've been stuck in the gold-silver ratio for quite some time in this range, around about the 75 to 95 range. And if we were to have a major crisis, actually the central banks will be the biggest drivers and they'll buy gold. You could still, and we hang on to that, you've had a little bit of a hammer there, you could still get a pop out the top. We have suggested it before. We're not saying it's our base case, our priority case, but you can still, if we get a crisis, you'll have a reduced industrial demand, business will stop, and you'll have central bankers reallocating more aggressively to gold in lieu of preservation. So we could still pop out again. We know the real silver bull trade is when we leave this box and we run that low, which is in and around the 72. You might support again at the 60s and have a bounce. And then we go lower, lower, lower. That's going to be very exciting times for the silver guys. And that's where I see those bigger numbers coming. How long it will take in between for that, it depends. If we are to get a financial crisis in between, as I say, silver will be held back for a while. That is why I say it's a gold trade first and foremost, because the biggest buyers are the central banks and the institutions. If you haven't got gold, you should have it, and it will run first. It's the king of the anti-fiat market. So should I go back and cover the gold chart, or do you want to come back at me there?
Sorry to interrupt this episode, but I'd like to tell you more about what we do at Gold Republic. At Gold Republic, we provide physical gold, silver, and platinum, fully insured, fully in your name, fully allocated, in top-tier vaults, securely saved in Amsterdam, Zurich, and Frankfurt. No paper promises, just real ownership, full transparency on your name. We are fully regulated and conduct regular independent audits of our vaults, with more than 700 million euros of precious metals under custody and 70,000 investors that trust us in the last 15 years. Our top-rated app gives you full control. Track live prices, explore detailed charts, and buy or sell in just a few taps. Whether you're hedging against inflation, currency risks, or financial stability, at Gold Republic, we offer real assets to safeguard your generational wealth.
Yeah.
Maybe let's first finish the gold chart and continue what you've been showing us before, and then dig a bit deeper as well into the mechanics of the physical silver market with the COMEX and LBMA.
I don't stay as broadly on top of that. I think almost Eric that you had on might even be better for that. I think there's shenanigans. I think it's very difficult to prove, and it's very hard to get pure information. And I just watch the price, and I think it reflects everything. You can see, for example, on gold, this has already been bid up now. This let's just talk numbers. It's ironic to get all these Bitcoin guys saying, yeah, the rotation trade is from gold into Bitcoin, because they feel this competitive anxiety towards gold. And this is, where did this get manifested? This is why I feel Bitcoin is such a CIA, Mossad, NSA psyop, is that everything they do is based off the paradigm of gold. They do mining. But hang on, it's not mining. You're not digging holes in the ground. You're doing algo, some useless sum, complex sum solving, and trying to be the first to be given a magic internet money token. That's not mining. Mining's digging a hole in the ground. Mining is finding the probability of the presence of metal. Then you have the whole concept of it, a digital gold. They chose to name it digital gold. It's someone who so wants to be Alexej Jordanov that he's mimicking you. He's wearing you the same fashion you wear. He's following you around. And then he's trying to almost off you and say, I'm the real Alexej. It's a problem that you're still around. He so wanted to be you. He's molded himself on you. And now he needs you to die so that he can exist as the original Alexej Jordanov. Your ongoing existence after being your biggest fan now sees he want to assume you. That's how I feel towards Bitcoin. So the whole notion of this antagonism, this attempt, this algo pushing of rotation, all points to me to be very little bit paid shills. They're like the Israel 7,000 the post type guys. I kind of find myself wondering, are these people are actually funded to do this? Because we've had so much of it. Bitcoin is down from its all-time high more than this. This is 11.29% to its absolute low. And currently, can you believe we're talking about a down move of this as a crisis? It's actually currently 8.84% down. There's absolutely very little to be afraid about that when we warned that you're going to have a strong move coming out of this continuation pattern, and it's going to be violent, and you could go leverage long, which we do which we did, banked huge amounts of profits and turned it into massive purchases of PMs. And I can say I probably bought the top on silver, and I don't care. With the profits that I got out of trading gold, silver, and platinum long out of the breakout of here, because we went in very short form from 3.5 to 4.3, which was not even 6 months. That was September, and we were done in October. Now, that wasn't $1,000, but it's close on. It's about $800 in 2 or 3 months. So, of course, you get a pullback. It's absolute law of technical analysis that you get at some point a pullback. And that's what happened. You've had an 8.84 to current market pullback, and at its worst point so far, 11, and that wick is being bought up. I mean, if we check, I'd be curious to see Bitcoin. If you look at Bitcoin and you have a look at it from its relative high, it hasn't done anything like the move recently that gold did. And on its down leg recently with liquidations was down 18%. And if you look at it currently, where it is down 11.84 from its high. But everyone is saying it's a rotation trade from gold. Well, gold is sure hanging on to a lot more, given a lot faster to it, a lot more recently, better than Bitcoin is hanging on to, actually going sideways for almost the last 2 months. So the last major move was down here. Now, it's a smaller market cap, and smaller market caps can move higher, but the origin story is totally suspect to me, and people should treat it with suspicion, and it could end up a big rug pull, or it could go to, I have a target of 150K on it, but I will trade that. It's not an investment hold for me. I don't trust it. I don't trust its origin. The whole little imaginary Japanese friend story that disappeared into the ether, never collected any awards, and left his wallet hanging there. Let me tell you, I'll repeat my prediction of 3 years ago that I've repeated many times since. BlackRock assumes custody and control over the Satoshi wallet at some point on behalf of climate change, transgender advancement, or any other narrative that they choose. That's how I see it ending. In other words, it was born to be that way from the beginning. It never had, they sold it to try capture all the people of liberty with big libertarian narratives, and they quietly shed it all along the way. You look at the people now, it's this young kid, Marla, who's setting up a treasury company. It's Michael Saylor and it's Larry Fink. These are the foundation. These are the guys now on Bitcoin that have some of the biggest control and holdings of Bitcoin. When you started, it had people like McAfee, the cypherpunks like Julian Assange, Roger Ver, and other people that have all either died, been chased into massive jailed and squeezed for tax, and various other. I mean, this thing isn't what it set out to be. It is not about liberty and being your own central bank anymore. That went for a ball long time ago, and now the institutionalized Wall Street people are all on board and in here. Anyway, that's my personal. So I don't trust it, and I don't think people should trust it, but you're welcome to trade it. I think you have more success in the status tokens that declared from the outset they want to be fast, of high value and utility. Bitcoin is neither cheap to move around in comparison to its peers or fast. So you look at XRP, XLM, and all of these others. Those courted the banking cartel. They went straight out and said, we want to be the future rails of digital money system. It's quite clear they're going to go that way. Those are going to be massive movers. HBAR, XLM. So our crypto sniper is pragmatic and wants to make the profits, but we don't love them for what they stand and tell us about the future world. Anyway, so gold. Let's go to the lower time frames now and just show you. We had a little bit of a double top that broke down. I will show you that. So technically, everything it's done has made sense. Let's just get that pulled through. So you had a double top there. So that's this part of it. And bomb, big slap in the face here. And then you rebounded. That was the dip buyers coming in late. And then you get the bigger dip. That's your neckline, target made on that wick. And then we had an inverted HVF like that, which is this. That also made its target. I'll draw it for you. And we've had all the downside targets made. And what I like about this a little bit is there was a possible risk of a larger head and shoulders, where this is the giant head, and you would have needed a shoulder rally, but you ideally needed the gold to support on the neckline, that blue line that I've drawn
Are
there.
you drawing right now?
Yes, is it not showing? Oh, it's interesting.
I
It's not showing. Let me.
I
I must change to entire screen. That's why it's not showing. Let me correct that. Sorry. Yeah. So this is what I was drawing. I was highlighting the double top. So let's do it again. I've done it in pink. It's just overdraw. So there it is in blue. That was the W top. It's kind of like an M. That was the blue neckline at 4,200. And that target got generated and ran the wick there perfectly. And I was just describing how you had an inverted HVF in here that generated a downside target. And that was made as well. And the one thing I was highlighting, and let's just remove all of that now, is there could have been a latent danger if we had supported here at the 3950 and done a rally from here. You could have had maybe a really big head and shoulder with a further move to the downside. But in actual fact, by running lower, it spoils that. We only see horizontal necklines with key levels. So by spilling through that, it's lost the likelihood that it reduces. I won't say entirely. It reduces the likelihood that we're in a bigger head and shoulder downside move. So I would say you could start looking. You might get another revisit, but when we get a double bottom here and a bounce, you'll end up with the equivalent reversal here. Or you could have even better and quicker, you could have a little on a lower time frame, a little reversal like that, for example, and you could start moving your way back. I don't have a strong bias here. I'm not leveraged yet. We look for a little bit more before we call bottoms. It's dangerous activity. But I think there's a reasonable chance that you might have made your final low already. That doesn't mean you can't come back and retest it, but you could start setting up reversal structure. And some of the speed in the sell-off, this was violent. You can see it particularly violent there. This was more moderated as well. So you tend to see the momentum going out of the down legs as well. And now you've had a rally and a tiny correction. It's calming down. It's going lower vol. There is that possibility, as I was saying here, just to have, we could be making a right shoulder here for a small reversal pattern. Now that would generate an upside target. It would be the first in a while. That could bring you up here. Then you could be in another, you go back to nestled head and shoulder. You could be in another left. You could be in another head if you made it there. Then you sell off a bit, create a right, and then you're in a bigger reversal pattern. So, there's quite a bit of assumption. I'm getting ahead of myself there. But it looks like it's slowing down on its momentum to the downside and dissipating. And silver, to be fair, the same. I actually did a very small, it's a bit early to be, but I put a tiny silver trade on just for the fun of it, because it started to look like it had also very much done. You see, it had a head and shoulder silver, slightly different structure, not the double top. Sold off really brutally here. This was also a warning. We pointed out this in our community. You've got a broadening structure there. That's called a megaphone, and it's an ascending megaphone on a bull pole. That is typical. You make marginally higher highs. That's the beginning of exhaustion. You had this flag structure here. Once you came down really hard, you bounced on a logical number, 50.65. That was a head and shoulder, so we drew it. It was quite clear that it was tapping out on strength. That had done a bit much. There you go, reversal structure. You could have shorted early on the flag. We will never short because we're just too bullish, even on short time frames. So we just stand out. You get out of your longs. That flag was made, that target, that's a flag target like that. That was made there. And then you got a little inverted here like that. And that target's been made as well. So you've just made a bunch of targets and now you're bouncing and you're rallying. Yeah, it's still early doors to say 100% this is done to the downside, but it's come all the way back to this inverted structures funnel level and is resting in there. So there is signs of a little bit of firming up on the silver market. So I think people that are calling for really low numbers are wrong on this. I think you could be not very far from basing. I have a bull bias on the macro, so you have to bear that in mind. But the technical patterns have been made. The only way, how do we be wrong? I always ask the question, how do we be wrong on this? If you're not prepared to ask that question, you'll be caught out. And the best scenario I can draw that could see us be wrong and it goes lower, let me just tidy up now, would be something like this on silver. And it's similar to the gold. It would need to happen on gold as well. And say that's a very small shoulder for the proportion of this head. And you'd need that to sell off hard back down to here. If we sold off hard and strong back down, this is a 46 mark. That could be something. But again, it's not proportional. The shoulder's really small compared to the head move. It's a bit of a sketchy head and shoulder. And you would need this to show real downside momentum hard here. So if you came down hard back down to 46, you'd have to consider the possibility, and that target is 37. For that head and shoulder to have a sell-off. But I look at that and I say, how likely this was a better example of a proportional head and shoulder, the monarch, as we call it. It's the king right in the middle. It's the first one. You do sometimes get what we call nestled head and shoulders, but these are disproportionate. These are really small shoulders. So I don't think this is not my base priority case. But if we sold violently down and there was real introduction of momentum like here, you can see the momentum in there, then you'd have to say, okay, if we did that, we got to watch it. That could go for a bigger break to the downside. I'm more prone to thinking that you could even be seeing some form of basing. The other thing to bear in mind, just before I hand back to you, because I'm taking you on quite a journey on the charts here, is the dollar index. Because it's an anti-fiat trade, gold, but it's also very specifically an anti-dollar trade too, to a degree. And this is it's generally an anti-fiat, but very specifically an anti-dollar. And you have to ask what the dollar is going to be doing. And we've warned that there is a little bit of the dollar weakness spell. There's been a little bit of a rollback on that. There's some degree of basing going on here. And I want to draw this for you to illustrate that. So we put all the key days in orange. When you're bouncing along, let's move that box out the way, the colored box. I'll just get that out the way. Let's go bottom right. This is our draw tool that we use for HVFs, by the way. It gives you risk rewards and everything. You can see this is coming along a top of the channel, coming along the top of the channel. This is the 100 Dixie level. This was sub CV19. Surge in dollar and then a crash, shooting star, just running the hundreds. Then it was support along the base level. And then we are drawing and showing you the upside HVF that came with that. That's HVF method. This broke here. And we said we went long dollar base. We said the dollar will move violently. It did. It made its target. That's that purple line and the top end of the range. Other big dollar maximists were saying 120 next, 130, then 140. We were like, no, done. You made targets, progress, decay. You came down violently. You supported on the 100. You went up. You supported on the 100. You went up, and then you broke the 100. Now, what's interesting, Alexej, is that we are in a triangle. We're trapped between the 100 key level of significance. That's horizontal there. That was support for quite a while that you eventually slipped through. And then the larger macro trend, basing ascending grind line, and that's the capping ascending grind line that gives you this trend, and we put the midpoint through there as well. You're probably going to grind along into this tight squeeze. At that point, I would expect you might get a technical break of the 100. But were you to break down, that would be the end of this trend channel. And that would be a real meaningful turn for the outlook of the dollar. It's interesting also that our funnel, which has drawn the green line there and there, also served as support. So it will take quite a bit to break this range, the 94 to the 98 range here that this funnel represents. So it might try grind up a little bit and get exhausted before coming off down. So dollar is part of the gold trade. You obviously had immense weakness and very high rate of descent at that point, that's dissipated. And we think that you're going to get, we think the yen's going to weaken against the dollar. We think the Korean won's going to weaken than the dollar. It might be a bit of financial nerves, a little bit of fear going to cause a little bit of bid in the dollar. We don't think that it's going to react violently like that, but it might if we had something exceptional. Um, but I think the days of being able to generate such strong bid in the dollar in this debt environment is hard. So our suspicion is it's going to be a bit of a in-between period for FX with a slighter, firmer dollar, and the possibility that at some point it gets a little bit disorderly and bumps up strongly in short spells, not sustained breakouts like it was here. So that's the dollar, the gold, and the silver. Plus, we threw in the gold-silver ratio in there for you.
Yeah, I actually wanted to also discuss platinum because we've also discussed that in our past interview in June. And you've called quite accurately how the move would go higher because 2 months after that interview, we've seen highs of, I think, $1,600. I'll love to have your perspective on that as well.
I think platinum outperforms gold by the time this whole story is done. And I'll also point out on the shorter time frames, platinum has pulled back even less. It's an incredibly thin market, and it is. And many people say, "Really? Do you think it could even outperform silver?" And I do. That said, it's like comparing children. I love them all. They have different attributes to them. So it's not an anti-silver thing to say, I think it outperforms silver. I've already told you 330, and I expect single digits to gold-silver ratio. You can't get anyone more bullish on silver, but I actually think that this is the discounted metal. This was our target that we expected it to meet. By the way, you said, did you have a feeling when pullbacks would come? I think that was a question you asked. We had a number of reasons as to why this would be a pause area. One of which was the targets being made on weekly HVF structures. We expect that. This is a weekly, it's a fortnightly, my apologies, two-week draw of our HVF that we'd been calling platinum as a break for quite an extended period. And that was its target. So now when you're looking at a fortnight, it's not the end of the world. You've had a little bit of selling wicks here. I'll let you see them again and remove my crayon from that, but that's a pause point. We expected a pause point here at the 1340. We were calling and buying long. I traded this and bought sub 1,000. I had 980, 995 entries on this trade, all the way up to these targets that were made here on platinum. So you tend to always pause and have pullbacks in targets. And these on the fortnightly time frame is very small beer so far. And also you can see this other level, 1337, and I'll show you why that's significant in a minute. You pull back when you ran that as well. It's another key level of significance. This is our charting that we're doing. And we've drawn a massive W bottom here as well that comes from this level. And this level is very unique. Let's just show it to you, go further back in time on platinum. You can see it was a support base over here as well. This before the sell side. So it was a lengthy support base period. It was resistance there. And then after running it, you had a pullback, you can see here. And this is all big in a simplistic way. A W bottom, but inside that W bottom, you had our weekly HVF as well. So you had that. So you kind of had the double dip bottom, but instead of going as deep, you formed this squeezing structure here instead of dipping weak. This was a bit exceptional, a sell-off. It was 2020, which was, of course, COVID. And at that point, silver traded $11 I think, but you could only buy it for 14 or vice versa. So this is a big, and that gives us 3,177. So we're resting now. I'm going to go back to a much lower time frame. I showed how far we are off from highs, and platinum is even closer to its highs at the moment. Since its absolute high on this new move in the precious metals bull, the lowest point was there. That was 14% that it dropped at its worst moment. But in actual fact, it is only 7% off its high now. So it's shown relative strength while gold and silver was skidding into slightly lower lows. So this is actually small beer, being 7.6% down. when gold is about 8 or 9% down and silver's about 11 or 12% down. And they've had absolute dips of, silver was 13, I think, and gold was 11. So it's shown relative strength here by the fact that it's already recovering quite well on a relatively small drawdown. It's South Africa and Russia. That's about 80% of your supply, by the way. And there is a South African mine, Bukani, I think it is, that's actually closed because it's not financially viable. So, that just throttles production. And the only thing that fixes that and gets that mine reopened is price. Price. Then they go back and they dig again if they're getting paid more. So platinum looking great with big upsides and far larger numbers. So in the event that, say, gold gets 10K, I actually think it can even make hundreds in due course, which is going to be a comment on fiat, not on gold. I expect 20% more on platinum and possibly even 100% more. So in the end, I think platinum is the most valuable metal when we are gold silver ratio dips below double digits, the platinum price will be higher than gold. It's my guess. I think there's again, it's a possibilities and probability. No one can say with anything certainties. I think it's being underpriced now. The entry cost to buy often puts people off as investors because it's hard to buy close to spot. It's hard to secure supply. It's quite a headache. You've got to really want the platinum, and I do. So I eat the extra cost, and I say, put your money where your mouth is, because it's a third of what gold is, ish. It's somewhere between a half and a third. So yeah, it looks a great purchase if you can get
So
it.
how would you say, like in general, like because it's a commodity as well, and in terms of recession, you've also alluded to silver taking a hit or at least not taking a surge if the recession or just economic growth in general would be slowing down. How would it affect then platinum?
Well, the thing with platinum and silver is the industrial demand side. I think we're already in a recession and we'll roll into some form of depression with this fiat debasement, which will be hyper stagflation, basically. And I think industrial demand could be throttled. But I think platinum is so unique. It's not easily replaced or used. And you've got to remember previously it got substituted by palladium, which is also a platinum group metal. And palladium's price is now north of 1,000, not too many hundreds behind platinum. Whilst when the substitution took place, platinum was in the 3,000s. It's already been there, and 2.8s and 2.6s, and palladium was a couple of $100 an ounce. So there was a huge economic, if you could cope with palladium instead of platinum and slightly lesser properties, but less than ideal, but it was so much cheaper, you introduced palladium and everyone started using palladium instead of platinum. And we're talking about catalytic converters here and the getting out of diesel cars and all of the things that have been pushed on us under the green hoax. And now it's not cheap anymore. It's not much below the palladium price. We're sitting at 1595, I think it is. Palladium, I think, is around 1200. 1400. There you go. I mean, it's just not. There's not. There's not any value there. You don't. If you want platinum, you might as well buy it because the palladium, it's not the perfect fit. You're paying almost the same money. $100 an ounce difference only. So you may as well get exactly what you want. Um, so that's the other thing. If you modeled, many people say, but platinum's underperformed gold for decades now. If you modeled the platinum group metals and you put palladium in there, you would have had palladium and rhodium that absolutely ripped, but particularly palladium. Those two are the largest. Rhodium's incredibly thin, and there are actually other metals as well that are ridiculously trace elements. But if you modeled the group, you aggregated them as a whole, the palladium group metals actually outperformed silver during this period. Because when platinum was weak, palladium was being substituted and palladium absolutely ripped. So just to make sense of that statement for many who are thinking, what the hell is he saying? I can't see that. This is what palladium did between 2016. I think there's a better chart with more history. Let me grab that one. There you go. And let me just de-log that as well so that people can see the fullness of that run. So everyone that says, well, platinum was underperforming from the 2010s to 2020, its dinner was being eaten by this guy, who subsequently pulled back. Now they're priced almost equivalently, the $100 difference. So they both got to go. They both got to go. My favorite platinum.
All right. Well, for instance, I think in the end we've just actually focused on precious metals today. We might unpack the yen carry trade another time. I think this was very comprehensive and also giving a really good perspective on where we're heading next. The bottom line is the fiat-based collapse is going to propulse precious metals even further. Would that be a fair summary?
You've lost your basis of account. Your fiat is completely debasing and it's being masked. That fact is being masked from you. Use gold ounces as valuation for all investment asset classes. Most things will pale by comparison. Thereby you stack. And you stack gold, silver, and platinum if you can get it. Even though the costs going in will be a bit higher and it'll be a bit rarer. Also, by the way, you can accelerate your stack by seizing unique trading opportunities, which I'm expecting. So we're quite uninvolved now. We were very aggressively involved with HVF. I highlighted that squeeze on gold. It was incredibly fruitful trading period that's moved most of our trading accounts to all-time highs. We've drawn down a lot and we've bought a lot of stacking. You can turbo your stacking. Our entire reason for existence, raison d'etre, is help you maximize your wealth in this time because you're facing such incredible fiat debt debasement. Protect that wealth so that it is that protection goes into things that where it won't be eroded, and also jurisdiction. That means you secure optionality and freedom by having multiple places outside of the Western axis, where they are going to go into tax scavenge mode because they were taxing you with inflation and spending on debt that they can't do to the same degree anymore. They have to get more totalitarian and come with direct taxes, particularly capital gains, maybe even unrealized capital gains and everything else. In short, they want to reduce you to serfdom so that you are compliant and rely on your UBI social score and biometric surveillance grid that they're downloading on you right now as you speak. If you want to have a good life for the remainder of your years, it's better that you are wealthy and you have options outside of the West. The great supposed capitalist nations of America, North America, and Europe and Commonwealth are converging into totalitarianism. And the irony of the communist nations of China and Russia are actually pursuing sound money principles, which used to be the fulcrum of capitalism. So there is a breach in trust and faith and confidence. We recognize that, and we're going to help our community members get wealthier, preserve that wealth, and have much better lives through virtue of an existence outside of the West. Thanks for having me on, Alexej.
Beautiful, Francis, as always. And I'll put obviously all the link down below from your method, but also your access to your community and online channels such as your Twitter and your YouTube. Francis, as always, a pleasure. Thanks a lot. And I'm really looking forward to a conversation with Matt and Henrik in a few weeks.
Looking forward to it. Bye for now.